Welcome back to the deep dive. You know those organizations? The ones really making a difference in your town. Maybe at the hospital, maybe the animal shelter. Ever stop and think, wait, how do they work financially? Why don't they pay taxes like a regular business? Well, today we're jumping into exactly that. The world of tax-exempt organizations. We're going deep to figure out what they are, why they exist, and how they actually operate day to day. And don't worry, if tax code sounds, intimidating, we'll break it down. This is your shortcut to really understanding a huge part of how our society functions. Okay, so let's unpack this. What's the big idea? Why would an organization not pay federal income tax?
Yeah, it's a good question. It really comes down to a deliberate choice based on public benefit. Simply put, these are not-for-profit groups that the government decides shouldn't have to pay federal income tax because of the work they do. Now, it's important to clarify, tax-exempt usually means no federal income tax. It doesn't automatically mean they're exempt from, say, state taxes or local property taxes. That varies. And the scope is, well, it's huge. The Internal Revenue Code, specifically Section 501c, actually lists over 30 different types.
Wow, 30. That's quite a range.
It is. It's a really diverse ecosystem.
Okay, 30 types.
Yeah.
But I bet there's one that most people think of. Right,
Okay.
let's focus on that big one.
Yeah.
Section 501c3. Why are they so common? What's their deal?
They absolutely are the most common and probably the ones you interact with most directly. The key thing about a 501c3 is that it must be organized and operated exclusively for specific exempt purposes. And that word exclusively is critical. It's not just a suggestion. It's a hard requirement.
Okay, exclusively for certain purposes, like what?
Well, the list covers a lot of ground. You've got religious purposes, charitable, scientific, educational, also testing for public safety, literary work, preventing cruelty to children or animals, and even fostering amateur sports competition, national or international. Though there's a specific rule there. They can't mainly provide athletic facilities or equipment.
Huh, okay, so that's a really wide net. Churches, schools, research labs, animal shelters, like you said earlier, all under this 501c banner.
Exactly. The common thread is that their activities are seen as providing some kind of public good that the government wants to encourage.
Makes sense. Now, here's something I know gets people's attention.
Yeah.
The donor side. What's the big advantage for someone who wants to give money to these 501c3s?
Yes. This is a major distinction. This is where 501c3s really stand out from almost all the other tax-exempt types. Contributions you make to a Section 501c organization, they generally qualify as deductible charitable contributions on your tax return.
Meaning you can potentially lower your own taxes by donating.
Precisely. It's a significant incentive for giving, and it fundamentally shapes how philanthropy works in this country. You generally don't get that same deduction when giving to, say, a social club or a business league, even if they're also tax exempt.
Okay, so that's a huge deal for donors.
Yeah.
But I remember reading that even within the 501c world, things aren't quite that simple. There's another layer, right? They're not all identical.
That's correct. Every single 501c3 gets classified as either a private foundation or a public charity. And this classification, it's incredibly important. It determines the rules they have to play by.
Private foundation versus public charity. Okay, let's break that down. What's a private foundation?
So think of private foundation as the default status for a 501c3. Unless an organization proves it fits the definition of a public charity, the IRS considers it a private foundation. And private foundations face much stricter operating rules. The IRS watches them closely. For example, their governing documents must include special provisions, things like requirements to distribute a certain amount of their income each year for charitable purposes, rules against self-dealing, which means insiders can't improperly benefit from the foundation's assets, and also rules against holding on to too much of a private business, what they call excess business holdings. The idea is to keep them focused on charity, not running unrelated businesses.
Okay, so stricter rules. What about their funding? Where does their money usually come from?
Typically, private foundations get their funding from just one or a few major sources. Think like a single wealthy family, or maybe one corporation. It's usually not broad public support. And often, their main activity isn't running programs themselves, but rather making grants to other charities or individuals who do run the programs.
Gotcha. So they're kind of like a funding engine. They give money to other causes, but they have to follow these really specific rules to make sure they're operating correctly and charitably.
Exactly right. They can be very strategic, very focused, but they operate under tight controls.
Okay, so that's private foundations. What about the other side? Public charities.
Right. Public charities. These are the 501c3s that manage to fit into one of the specific excluded categories defined in the tax code. Because they meet those criteria, they don't have to follow those same strict operational rules that apply to private foundations.
And what kind of organizations fall into that bucket?
Well, think of the ones that inherently have broad public involvement. Churches, schools, colleges, universities, hospitals, certain medical research organizations, if they are publicly supported. It also includes other types of organizations that get broad public support and don't rely too heavily on, say, investment income or income from unrelated business activities. And you also have organizations that exist solely to support other public charities and ones that test products for public safety.
You mentioned publicly supported a couple of times there. What does that actually mean in practice?
Yeah, there's a specific test for that. Generally, to be considered publicly supported, an organization has to show that at least 1/3 of its total financial support comes from governmental sources or directly from the general public.
Ah, okay. So the big difference really boils down to where the money comes from and how they operate. Public charities have broader support and maybe a bit more operational flexibility, while private foundations have narrower funding and stricter rules.
That's a good way to summarize it. It's fundamentally about their relationship with the public and their funding base, which dictates the regulatory framework they operate under. It's not just a label, it shapes everything.
This is fascinating. So we've covered 501c3s in detail, but you said there are over 30 types. What else is out there beyond the charities and foundations?
Oh, absolutely. The rest of the 501c sections cover a really wide range of groups. Many you probably encounter without even realizing they're tax exempt. For instance, you have things like corporations organized by Congress, like federal credit unions, or title holding corporations, which just hold property for another tax-exempt org. Then you've got civic leagues and social welfare organizations. Think like your local Kiwanis or Rotary Club, maybe a homeowners association, or even a volunteer fire department.
Okay, those make sense. Community-focused groups.
Right. And there are also labor unions, agricultural groups, horticultural societies, business leagues too, like a chamber of commerce or a local real estate board.
Good professional groups as well.
Exactly. And social and recreational clubs, think golf clubs or hobby groups, fraternal societies, mutual insurance companies, even cemetery companies, and veterans organizations for members of the armed forces.
Wow. It really drives home that tax-exempt isn't just about donating to charity, is it? It covers so many different kinds of structures that support communities, industries, social groups.
Precisely. It reflects a broader policy decision to encourage a whole host of activities deemed beneficial in some way, not just traditional charity.
Is that it, or are there other major categories?
Well, there's one more significant category worth mentioning, which operates under a different section entirely. Section 527. These are political organizations.
Ah, okay. Politics.
Yeah.
How do they fit into the tax-exempt picture?
Section 527 organizations are set up specifically for political activities. Their purpose is basically collecting contributions or spending money to influence elections, selecting, electing, or appointing someone to public office at the federal, state, or local level. So think political action committees, PTs, political parties, campaign committees.
And their tax exemption works differently too, I assume.
It does. For a 507 organization, certain types of income are tax exempt, but only if that money is used for their political purpose, that exempt function of influencing elections. So money they get from contributions, membership dues, political fundraisers, selling campaign stuff, that income can be tax exempt if it's set aside or spent on political activities. Income used for other things, like investments, might still be taxed.
Okay, so it's a very targeted exemption specifically tied to their political purpose. That really highlights how specific these rules are, separating political activity from, say, charitable work under 501c3.
Absolutely. It underscores that different types of tax exemptions serve very different policy goals.
So let's try and tie this all together, especially for someone listening who might be thinking about making a donation. What's the absolute bottom line here regarding contributions?
The key takeaway, the most important rule to remember, is this. While lots of organizations are tax exempt, donations are generally only tax deductible for the donor if they are made to a Section 501c3 organization. Those charities, religious groups, educational institutions, etc., that we spend a lot of time on.
So donating to your local 501c3 animal shelter, probably deductible.
Correct.
Paying dues to your, say, 501c7 social club.
Generally not deductible as a charitable contribution, even though the club itself might be tax exempt.
Right. Are there any exceptions to that rule?
There are a couple of fairly narrow exceptions mentioned in the tax code. For instance, contributions made to a U.S. instrumentality or sometimes to a volunteer fire department might be deductible, but only if the contribution is made exclusively for public purposes. But the main rule holds. For donor deductibility, you're almost always looking at a 501c3.
Okay, that's a really crucial distinction. We've covered a lot of ground here, from the 501c3s everyone knows, like hospitals and schools, through to, well, social clubs, business leagues, and even political organizations. It's quite the landscape.
It really is. And, understanding these different categories isn't just academic. It gives you real context when you interact with these groups, whether you're donating, volunteering, or just trying to understand their role in the community. Knowing whether something is a public charity versus a private foundation or a 501c3 versus a 501c4 civic league helps you grasp its purpose, its funding, its limitations. It makes you a more informed citizen, really.
That's a great point. So maybe something for you, the listener, to think about. Now that you know about these distinct purposes and the different rules each type of tax-exempt organization follows, how might that change how you decide which causes to support? Or even just how you view the different roles these varied organizations play in shaping our communities every day?